Here's three things that concern me about this real estate market right now. If you're a home buyer, especially if you're a first-time home buyer, maybe you've decided this is not the right time. Whatever reasons you have, you're deciding to postpone buying your home right now. You'll want to watch this video to see my three major concerns. There's actually four. There's going to be a bonus one at the end that I'll toss in there. So here, it's really four reasons, four concerns that I have about this real estate market. And before I get too far into this, I don't want to forget, you can head to catherineanddarin.com or look for our podcast wherever you listen to podcasts. The name of the podcast is Real Estate, Money, and Marriage. Catherine and I did a podcast on these four things that concern me about the real estate market. And she gives me her feedback on these four things, and adds her ideas and insights and experience to that. So go check that out. catherineanddarin.com. You can listen to it, or wherever you listen to podcasts. So the number one thing that concerns me is interest rates. And the reason why interest rates concern me is not necessarily about home affordability, but what we're hearing from what we see from other real estate agents out there. Maybe you've seen this in your social media feeds. Agents are telling buyers to buy now and then refi. I think the mantra, the saying that they're coming up with is marry the house and date the rate. And things that rhyme are great. We know Johnny Cochran used that famously in the OJ trial.
Remember these words: if it doesn't fit, you must acquit.
So obviously when things rhyme, it must be true. In this case, my biggest concern about this idea, this advice, is that if you're actually expecting that the rate will go down and it doesn't, and you bought and the rate doesn't go down, you might be hurting in the near future because maybe you overextended. You took out the max mortgage thinking like, hey, I'm going to be able to make this up in early next year because that's what my agent told me. Maybe that's even what my mortgage lender told me. As we head into more inflation, as we head into recession, how secure are you really? Like if you're maxed out and inflation keeps climbing, or recession hits us a little bit harder, how much job security do you have? It just concerns me that we're giving that advice in this industry, and maybe it's not going to actually end up happening. The second part of that is if you do postpone buying, and that you hope that rates will come down. So if you're thinking like, well, I'm hearing that rates will come down, so I'm going to wait till next year to buy. Well, what happens if they don't? Historically, what we know is that rates look like this. So if you go back to the early 1980s, you're going to see that interest rates were at 18%. Historically, even right now, we're still low. Mortgage rates are still historically low. And so I'm just not sure when we look at a chart like this, what makes us think that this is the new norm, that interest rates should be under 4% moving forward always. You can see that rates, even through this climb in the real estate market in the early 2000s, the aughts, and then what led to the housing market crash and the Great Recession, interest rates were sitting around 6-7% even. They dipped down into the fives a little bit here, but basically they're sitting around 6-7%. So when we're sitting around high fives, 6 right now, that's still like a point below. Why do we think that they're necessarily going to come down when historically, look at this. This is the chart of looking at that. So number two thing that concerns me is home builders' confidence. The reason why this concerns me is people are renting if they're postponing their buying process because they're waiting for rates to come down, or it just feels too expensive to them right now. So they're going to kick the can down the road and go, well, maybe I'll buy in a year or two, hope home values come down, hope rates come down. Home builders are going to stop building homes, which doesn't solve a lot of problems for us then. So if we look at this article from the National Association of Home Builders, they might have their pulse on how home builders feel. we can see that um, builder confidence in the market for newly built single family homes posted its seventh straight monthly decline in July, falling 12 points to 55, according to National Home Builders Association. This mark is the lowest HMI reading since May 2020 and the largest single month drop in the history of the HMA, except for a 42 point drop in April of 2020. Now, just remember what was happening in April of 2020. That is right after all the lockdowns happened. So no one really knew what was going to happen. In Washington, for example, builders were told they were non-essential. So they couldn't even build homes. Like, why would they have a lot of confidence in their product that people are going to buy when they can't even build the homes? I think that's going to play a little bit now into how inventory, if builders don't feel good about what's happening, they're going to stop building homes because buyers aren't taking advantage of the market right now. But here's what we know is that there's a shortage of homes. So in this article, we can look at that by one estimate, U.S. is more than 3 million homes short of demand from would-be home buyers. And here's another article that says that America is short more than 5 million homes and builders can't make up the difference. So whether it's 3 million, 5 million homes, that's still a lot of homes. And if buyers aren't buying, then builders decide we're not going to build, we still have an inventory problem. That's a great concern of mine with whatever's happening. If you're just renting or you're moving back in with family or you're moving in with friends and you're going, well, I'm going to wait, that doesn't solve the inventory problem. We still are 3 to 5 million homes short. And if builders decide we're not going to build, I don't know how that problem gets solved. The number 3 thing that greatly concerns me about this market right now is investors are going to ramp up the buying. If they see that homes are sitting on the market, that buyers, especially first-time buyers, aren't getting in because a lot of investors and first-time home buyers are competing for that lower end of the market, investors are going to ramp up their buying. They're going to see that there's deals. They're going to see that there's price reductions. They're going to see that they're going to be able to maybe negotiate with these sellers and take advantage of this. If the buyers, if single-family home buyers, if first-time home buyers aren't going to get in there, then the investors are going to get in there. So what's waiting for you when you decide to jump into the market? It's just more investors have bought up the market and it hasn't allowed it to fall down as much as maybe you're hoping that it's going to fall down. And then the 4th thing that concerns me about this real estate market is that mortgages are going to be harder to qualify for. Here's why that's a real problem. The Fed, I don't want to get too much into this, the technical aspect, but there's a thing called mortgage-backed securities where you go into your lender, you borrow some money, and then they sell that mortgage out to someone else. The Fed, the government, was one of the biggest buyers of those. They have bought over $1 trillion of mortgages over the last 10 years. And right now, the Fed is no longer directly supporting the mortgage market by purchasing mortgage-backed securities, which helps to keep that market liquid, which means that a mortgage company, a mortgage broker, a bank, your credit union, when they give you money to buy a home, before they could probably count on selling that mortgage probably to the government. And they would set the standard, the government, the people that are buying that mortgage, they would set the standard and go, we need a credit score to be this. Here's the underwriting for this. We need collateral on this level. The banks now have to keep those mortgages themselves. Most likely that's what they're setting themselves up for. And that's why we see mortgage rates increasing. The mortgage rate has nothing to do with the federal interest rate. It has to do with this mortgage-backed security right here. These correlate and are causation of each other. Once the Fed got out of this, that's what you see the interest rates rising because it's a risk reward thing. If the bank has to keep it, and they're afraid and they can't unload it and you're going to default on it, they want to make sure that they're getting paid the maximum amount they can get paid for it. So they're going to increase the rates, maybe closing costs, maybe increase the PMI a little bit here. So those 4 things, the interest rates, home builders confidence, investors ramping up what they're doing, and then mortgages being just harder to qualify, concern me about what's going on with this real estate market. And like I said, Catherine and I did a podcast on this where we go a little bit deeper into it. She adds her thoughts and gives me some feedback on what I'm thinking here. We just go deeper into this content. So you can listen to that on catherineanddarin.com or listen to it wherever you find podcasts. The name of our podcast is Real Estate, Money, and Marriage.